Imagine you're the president of a small country that has exactly one citizen in it, and you hear from the grapevine that he's planning to start a business. Wow, fantastic, you think. If he starts a business and makes money, then I can tax him based on that money. Yay! Money is good! So a year goes by and you find out that he has made exactly $100 throughout the year. That's great! You rush over to this person's house and demand 10% of his profit, because that's the tax rate that you thought of on your way over to his house. That gives you $10, which is massive. You could do so many things with that money. But, your royal subject rudely exclaims, it cost me $100 to buy all my ice cream ingredients, so at the end of the day, I've actually made no money. I just made back what I spent. Ah, you think, as you fumble oddly. That's true. I suppose it only makes sense to tax the profits that you make in a year. You go home, disappointed, and drink some rock soup as usual. Well, there's always next year, you think. Another year rolls around and you head over to the country's traitorous, selfish ice cream salesman and demand to see his accounting. Luckily, this year, the ice cream salesman bought a professional ice cream machine and made some really tasty ice cream that everyone loves. So this year, he made $200. Fantastic, you say. Well, if the ingredients cost you $100 and you made $200, then that means you made $100 in profit. The math is simple. Now go ahead and give me 10% of that $100 or else I'll shoot you out of a cannon. Not so fast, the ice cream salesman says, with a bit of wretched self-importance in his voice. I spent $100 on this new ice cream machine this year, which means that overall my business required $100 in ingredients and $100 in equipment, and although I generated $200 in income, I actually didn't generate any profit this year either. Your mouth drops to the floor. How could this be? You cry. This cannot be true. I can't eat soup again tonight. I've always wanted to try McDonald's, and today I thought I'd finally have enough money to fund a government food stipend. Furious and in dismay, you rush to your most loyal advisor. Rough! Rough! He says. That's absolutely true. I'm in shambles, you respond. What can I possibly do to remedy this situation? Bark! Bark! He says. Your brain lights up. What a brilliant idea! Bark grows in layers, and just like bark, I need to strip away this person's spending into layers. You go back to that conniving salesman, point your finger at him, and say, look here, as knowledge begins to smoothly pour from your mouth. You say, when calculating your profit for this year, it makes no sense to subtract the whole price of the ice cream machine from your income in 1 year. That's because the ice cream machine will last, let's say, 5 years, which means that technically the machine will cost you $20 per year when you divide the price of the machine over the 5 years that you'll have it. That's 20% of the ice cream machine per year. In that case, it's only natural for me to subtract $20 per year from your income to calculate your profit. But that's not fair, grovels the ice cream salesman, like a whimpering puppy. I didn't actually make any profit this year, but according to your calculations, I made a lot of profit, and I owe you tax money. You think this isn't fair? Says the leader with an all-knowing gleam in his eye. Well, in that case, let me put it to you this way. When choosing a phone to buy, would you buy a $100 phone that lasts for 1 year, or a $200 phone that lasts you for 5 years? In this scenario, it's very natural to think of your purchase as an investment that you pay for yearly. In the first case, you'll spend $100 per year on a phone, and in the second case, you'll spend $40 per year on a phone. So the second case is much better. Yes, that's true, but... Boof, boof, says the advisor. Ah, the advisor is right. If I don't watch my tongue, I'll be boofed out of a cannon. Fine, I guess that means I owe you $8, and I end the year with negative $8 in profit. What will I tell my wife? Rough, rough, says the advisor. Well, the wheel of time continues to turn, regardless of the happiness or sadness of humanity, and 10 years passes by. By the end of those 10 years, your McDonald's spending has caught up with you, and you're now 600 pounds heavier. Your doctor says, you'll either need to quit eating, or you could have an extra pair of legs installed behind your other ones to support your extra weight, turning you into a minotaur. Of course, the only logical solution is to become a horseman hybrid, but it's going to require more funding. What to do? You go back to your most trusted advisor, now promoted to the head of the armed forces, and he listens patiently to your situation. Suddenly, he begins chasing his tail. Of course! Why didn't I think of that? I should go back to that ice cream salesman and make him pay his fair share of the taxes. He's been cheating me for far too long. So you go to the ice cream salesman and tell him that although he was able to deduct 20% of the price of his ice cream machine every year before, it's only reasonable that he should only be able to deduct 80% of that 20% per year. Because, never mind, that's just how it is. And if you don't like paying taxes, then we're going to group you together with those guys who live in the South. And you wouldn't want that, would you? Yeah, I didn't think so. Anyway, what that means is that while we subtracted $20 per year from your income to calculate your profit, we're only going to deduct 80% of that 20 now, which is $16. That means that, according to us, you made more profit this year, and that means that you need to pay us more tax money. Ha ha! But wait, if I add all that together, that means that over the next 5 years, I won't even have had the full price of the ice cream machine considered as an expense. Yeah, and so what? You want the government to change your diapers too? Are you a redneck or a stinking liberal, huh? The ice cream salesman, now exhausted by the exploitation, doesn't even have the energy to rebel. He simply reaches over to his piggy bank and hands it over to the handsome, fearless leader. The leader, overjoyed and feeling that he's already got 4 legs, runs swiftly to the doctor's office. But not actually having 4 legs, and on account of not being able to support his weight well, falls and dies. Everyone cheers, but they have no idea what's about to come next. Your son takes power, and he's almost as brilliant as his father. The first thing he does is change the name of the country to Canada and imposes a variety of tax reforms. The first reform is that you can now only claim 50% of what you would normally be able to claim during your first year of owning an ice cream machine. So now, a certain ice cream salesman can only claim $8 during the first year when he buys a new ice cream machine. We're going to call this the first year rule. Why did we implement this rule? Never you mind, says the new handsome and all-knowing leader. If you stand around and ask stupid questions all day, your neck is going to start turning red. Anyway, the second reform is, in brief, that you can't claim an equal amount every year anymore. To explain, let's review how we got here. Before, long ago, when my father was in charge, the situation looked like this. You would buy an ice cream machine for $100 and let's say make $100 in income that year using that machine. You might say, well, that means I made no profit and shouldn't pay tax. But that's where my father's genius came through. He said you can only claim to have spent 20% of the price of the machine per year for 5 years, and 20% of $100 is $20. So although you might claim you made no profit, according to our calculations, you actually made a hefty profit of $80, which we have every right to tax you on. And because we're generous, we only demand 10% of this profit be collected as tax, which will be wisely used for infrastructure projects. Then my father surprised everyone with a genius move to restrict peasants such as yourselves to claim only 80% of that initial 20% as a business expense per year. 80% of 20% equals 16% overall. So now you can only claim 16% of $100 as a business expense, which is $16. That means that, according to our calculations, you've made $84 in profit in this situation. Thus, we've increased the pool of money that we can tax you from. Now, I have a dream. I have a dream that with my second tax reform, I'll be able to extract even more tax from you in a way that is completely unfair to you, but in a way that's so complicated that the ordinary person won't even realize they're being swindled. And in fact, they'll develop envy and anger towards people who write off their expenses as tax write-offs. Just tell us what the second reform is already. We will now call your ice cream machine a depreciating asset, which means that we, the government, consider the value of your asset to decrease every year, which means that every year, when you go to claim 16% of the value of your ice cream machine, that 16% will be less than what 16% was the year before. Watch carefully to what happens to the profit that we calculate as we decrease the value of the asset every year. So what does this mean? Well, it means that you'll never actually be able to claim the full price of the ice cream machine as a business expense, meaning that the government basically takes more money from you than is actually fair.